Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100 as the big banks kick off the unofficial start of earnings at the end of the week. Chris, it's great to see you as always. Welcome back to Trade Talks. And it seems like the last quarter just whizzed right past us. Here we are with the big banks reporting this week.
I can't believe it's another quarter already come and gone. It just seems like once COVID started, everything just kept moving along quicker and quicker. But again, the time is still the same, but here we are again, getting a little bit older as everything kind of moves along. What's interesting about the index and the earnings season and everything else is that the rhetoric continues to be the same. Will companies be able to perform at lower multiples, even though that the indexes across the board have been rising, but that rising tide has been, for the most part, as we discussed multiple times, and you've discussed multiple times with other folks, a tiny basket of stocks, and those top names are kind of underperforming a little bit today. The question then comes down to, on inflation and the Fed and where we stand with that. We got a big CPI print on Wednesday, PPI Thursday, Michigan consumer confidence Friday. So a lot to dig into those numbers for the market pundits who are looking for whether you're taking the bullish scenario or the bearish scenario. And if you look at the indexes, especially if you look at the NDX right now, we're only a lob wedge away from the June highs, which is a 52-week high, and that's 15,284. I don't see much pulling this market back right now other than a broad macro stroke. We've already baked in a second quarter point hike at the end of the month. The question then comes down to, are you going to need more? And that's going to be more on the data-dependent Fed, which is unfortunately what we've come to appreciate in the markets over the last couple of years. As opposed to the markets and the stocks being, stock pick worthy and taking your own equity, picking a company that you want, that you think is going to be doing well, you have to wait on the macro. And the macro is what's driving the market, and that's what's going to be moving this forward. Regardless of what the earnings are going to be, it's nice to dig into that on a stock-by-stock case. But again, the macro is going to be the ultimate driver here.
Let's take a look at your first chart here with some fresh technical levels to watch in the near term on the Nasdaq 100.
Sure. So interestingly enough, the index is down today while the broader market is having a nice day. We're off about 1% last week on a holiday shortened week. You had mixed employment numbers, whether you look at the ADP print on Thursday, the non-farm payroll print on Friday, unemployment still holds at 3.6%. That was the first miss for the non-farm payroll in a significant period of time. But again, that gave a nice market rally on Friday, but the ADP numbers sold off. So the index itself has been reacting to that in kind. Right now, we're trading at about 15,000. We opened at 15,030. The index is waffling back and forth between flat and unchanged, and plus or minus 10 or 15 basis points here. So really, what we're looking at is a very tight support resistance level. Support right now is tight at 14,980, then 14,880. Major support sits below at 14,140. Resistance is above at 15,100, 15,285. If we close positive today, this candle is going to be nice. We're at the green mark right now, even though the index is down, just because we're higher by about 5 or 6 points from where we opened. Note the RSI at the bottom of the chart is at a comfortable level of 59. We had hit that above 70 through June when we made the new 52-week high. We had the nice pullback that we were expecting, and now the index is trading on a consistent level with relative strength. And if you go a little bit further, you look at the MACD, it's doing well there as well. So I expect this to move a little bit higher in the near term.
And finally, Chris, let's take a look at the constituents that are leading the way, because to your point, when we're talking about concentration risk, just a handful of stocks moving the index.
Absolutely. I mean, breadth is 9-to-1 skewed positively. That means that the index should be up significantly, yet we're off on the day. That is because you only have 10 stocks, 10 companies that are in the red, but they're all the big boys: Alphabet, Amazon, Apple, Tesla, Microsoft. And that's all because the index special rebalance is going to be taking place at the end of the month. The index team for Nasdaq announced on Friday that they're going to be doing a special rebalance of index weighting because of the larger cap companies being overweighted within the index. No company is going to be added or removed, but on Friday, July 21st, at the close, there will be a rebalance of all the different constituents, and those higher weightings are going to roll over to the lower weightings, which could give a very different look to the chart come trading on 7/24 that Monday.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.